Hey friends, welcome to one more stock analysis video with me. One of the most important questions over the last 1.5 years in the stock market has been HDFC Bank का stock return कब देगा? There has been a narrative in the market that ICICI Bank is a new market leader. HDFC Bank has a problem with its management. HDFC Bank has a problem with its internet banking. Therefore, the stock is not giving any return. So therefore, what is the real truth? Nobody is trying to decipher. Many influencers have also come up with the video that HDFC बैंक का टाइम खत्म हो गया है and अब HDFC बैंक में बिल्कुल भी इन्वेस्ट नहीं करना चाहिए. So as the stock price does not give returns, a lot of narratives do get built up around the stock. So today in this video we are going to break up the business of HDFC Bank. Then we will talk about what is really hampering the stock price, why is the stock price not really going up, and what you as an investor should do with the HDFC Bank stock. So let's first set the context of our discussion. We've seen over the last 1.5–2 years, HDFC Bank has not given any returns. On top of this, there was a very important event that took place in March last year, which was HDFC and HDFC Bank decided to merge themselves into a one entity, which will be HDFC Bank, and HDFC Limited will cease to exist. This was a very important event, as we will discuss in the video ahead. That's the second point that is there. Now, ever since the merger announcement has come about, HDFC Bank stock has refused to give any returns, and fund managers are starting to dump the stock in favor of ICICI Bank, which during the same time has given massive returns. So now from here on, we will start our analysis based on three parameters. Number one parameter will be what is the business of HDFC Bank really doing. Number 2 point will be how is the merger affecting the stock itself, and then we will talk about the subsidiaries of HDFC Limited and how those are also affected because of this merger. And in the end, we will talk about a valuation. What is the valuation of the company? And then in the end, the conclusion and what are your key takeaways from this video. Let's first talk about what is happening around the business of HDFC Bank. HDFC Bank has now reported its Q3 numbers as well, and on the Q3 numbers, the loan growth is at 20%. The retail loan growth, which was already missing for the last 1.5–2 years, has started to come back. The deposit side of it is growing very fast at 20%, which is a key heartening fact to see in the results. And the NPA on the gross NPA side and the net NPA side continues to be very stable. The bank has given excellent commentary on both the loan growth side and the deposit side, and NPAs don't seem to be a problem anymore for the bank. Now, what we have already seen is that there was some bit of problem on the internet banking side of it. The internet banking interface of the bank was continuously very poor. It was down and customers used to complain. RBI had also banned HDFC Bank from issuing any new credit cards until it solved its internet banking problem. Now the bank has said that over the next 1.5 years, it will completely refurbish its internet banking solutions, and it's a slow process. One must really understand HDFC Bank is an elephant. To turn around a bank which has 14 lakh crores of assets, it requires certain amount of time. So over the next 1.5 year, you will find that HDFC Bank starts to come on top of its internet banking issues as well. Now there was another question that had come up. Because of the change of management from Aditya Puri, there is a problem with the bank and the market is losing trust on HDFC Bank. In my opinion, over the last 3.5–4 years, HDFC Bank has no problem with its top management. The top management led by Shashidhar Jagdishan is doing extremely well, and every business on the loan growth side of it is growing exceptionally well, be it the retail side of it or be it the wholesale side of it as well. On the deposit side of it, the bank is continuously outperforming the sector. So in my opinion, it's a wrong narrative that there is a problem with the management. In fact, the management is performing extremely well and no problem as such. So on the business side of it, the company continues to do extremely well. On the internet banking side of it, yes, there are issues, but the company will require at least 1.5 year to solve all the internet banking issues. On the management side of it and the depth of the management, you will find that there is no problem as such, and the bank is extremely strong. As time goes on, you will find that the loan growth and the deposit growth continue to be extremely strong. Now let's talk about the most important event in the life of HDFC and HDFC Bank. In March last year, both HDFC and HDFC Bank decided to merge themselves into HDFC Bank. So what this really does is it gives HDFC Bank access to home loan clients, and it can cross-sell a lot of products to the home loan clients. And HDFC Limited's clients can get access to a whole host of services such as deposits and all other services that come attached with it. Now, it's an excellent idea for the long term. The HDFC Bank loan book is at about 14 lakh crores, and HDFC Limited loan book is at about 4 lakh crores. So the merged entity will be somewhere between 18 to 19 lakh crores. Now, what is the problem and why is the market having a terrible time re-rating the HDFC Bank stock? The answer is very, very clear. On the HDFC Limited book, which is 4 lakh crores, there is no CRR and SLR. RBI put CRR and SLR on a bank's book because it wants to protect the deposit holders. In case of a problem with a bank, RBI can withdraw that money and give it back to the deposit holders. Such regulations are not available on the NBFC side of it, and therefore the 4 lakh crore book which HDFC Limited holds does not have a CRR and SLR. If at the date of merger effectiveness, RBI says that HDFC Limited's book needs to have a CRR and SLR, you will find that the bank has to cough up a capital of about 80,000 crores to 1 lakh crores into assets which yield 4-5%. Now, as we are in a credit upcycle, investing that amount of capital in assets that yield only 4-5% is a subpar capital allocation, and it will hit the ROEs in the near term. So the market is worried if the regulator does not give dispensation to HDFC Bank, HDFC Bank will have to cough up capital into subpar assets which will hit the ROE. So the bank is worried about this, and that's why that's why investors are not re-rating the stock. What is the work around this? The work around this is HDFC Bank has asked the regulator for some dispensation. It has asked the regulator to give it a glide path whereby over the next 1.5 years, it will slowly and steadily try to create the CRR and SLR provisions on the HDFC Limited book. If the regulator gives HDFC Bank some glide path over the next 1.5-2 years, the ROEs will not be hit badly as they would have, and bank will slowly and steadily start to create these provisions. However, all of this is with the regulator, and the regulator, which is the RBI, has not given its opinion on this, and that's what the market is worrying about now. What will happen on the HDFC Limited book? So therefore, that's the major hangover that is on the stock price. What will happen on the HDFC Limited book? Now let's talk about the second bigger issue within the merger. As you know, HDFC Limited continues to hold a lot of subsidiaries. The subsidiaries include HDFC Life, HDFC AMC, RBL Bank. All of these are subsidiaries of HDFC Limited. Now, according to the bank regulations, a bank cannot hold too many subsidiaries. The regulator could say that HDFC Bank cannot hold all of these subsidiaries, and they will have to be parked off into one more holding company. So the market is also worried about this point, that if the regulator comes and says that HDFC Bank cannot hold all of these subsidiaries, there has to be a transaction, and that transaction could be detrimental to HDFC Bank. So the market is again worried about all of these things, and the regulator has not clearly spoken about a lot of these things. In my opinion, we have seen other banks continue to hold a lot of these subsidiaries. For example, ICICI Bank continues to hold ICICI Mutual Fund, ICICI Prudential Life Insurance, and ICICI Lombard. Similarly for Kotak, and similarly for Axis Bank. So you will find that markets worries are overblown out here, and the regulator will find a solution whereby HDFC Bank will continue to hold all of these subsidiaries in some form or other. So now let's talk about the valuation of the company. The valuation of the company trades at about 3 times price to book. Given the fact that HDFC Limited is even cheaper than this, and HDFC Limited will have subsidiaries which will get attached to HDFC Bank, the stock is even cheaper. On a 10-year relative valuation basis, the stock is trading at the lower band of its said valuation, and this is all because of the fact the merger hangover continues to remain on the stock, and the market does not really know what the regulator will say. So the valuation continues to be comforting, no problem as such there. And given the subsidiaries of the bank and the housing finance company, the stock is even cheaper from here. So let us summarize what is happening with HDFC Bank. On the business side of it, the business continues to be extremely strong. The bank continues to gain market share both on loans and deposits, so not a problem as such. On the merger side of it, we find there are some hangovers. As I have already explained, the CRR and SLR norms will mean that the market will continue to remain worried on the ROA and the ROE of the bank. And until the regulator clarifies what is its position, the merger hangover is unlikely to go from the stock. The third point is the subsidiary status is clearly unknown. The regulator says that the bank cannot hold all of these subsidiaries. However, I feel that as all other banks continue to hold all of these subsidiaries, that should not be a real problem. On the valuation side of it, the bank continues to trade at a 10-year low on the multiples that it used to trade on, and I don't see any problem as such within the business of the company. So what is your key takeaway? The key takeaway is, on the business side of it, the bank continues to be as strong as ever. On the stock side of it, there are some hangovers that continue to remain on the stock, which will get cleared out somewhere in Q2 of this year. Until then, the stock could remain range bound and could have problems. It could derate from here on as well, as the business continues to be very strong. So overall, no problem on the business side of it. Some bit of hangovers on the stock side of it, but as they say, investing in stock market is not really easy. Returns are not very linear. Returns are very lumpy in nature. So it will require some bit of patience to exactly get some good returns from the HDFC Bank stock. If you like my video, do subscribe to my channel and stay tuned for more in-depth analysis on a lot of stocks.